Good morning, good afternoon, good evening, everybody, wherever you're joining us from in the world. As chair of the Chartered Banker Institute, it's my very great pleasure and privilege to be introducing today's virtual conference, the first of 3 short days discussing all aspects of what is termed as responsible banking and how the banking sector and community are interpreting it in their organisations and as individuals. This is actually the 6th time the Chartered Banker Institute has hosted such a conference, but it's the 2nd successive year we're holding the conference virtually. So today we will be discussing what responsible banking means for organisations. Tomorrow we'll be looking at how the United Nations principles for responsible banking are being implemented by banks who've signed up to them. And then finally on Thursday, we'll be looking at what responsible banking means for the education, training and development of bankers. So please sit back with a coffee or whatever drink takes your fancy at this time of day and enjoy what should be 3 very thought-provoking days looking at most aspects, if not all aspects, concerning responsible banking. Now, for those viewers not already aware, the Chartered Banker Institute was founded in 1875. So we already have nearly 150 years of experience in educating bankers. And with a network of approximately 30,000 professional bankers across the globe, we're proud to be regarded as the voice of responsible and sustainable professionalism in banking, with a focus on a responsible banking agenda, emphasising the importance of education, skills and training to banking. We were one of the first UK organisations to endorse the UN principles for responsible banking, and we also support the wider attainment of the UN Sustainable Development Goals. Clearly, the events of the past year and a half have been tumultuous right across the world. For some, the level of sadness and loss has been unimaginable. Now is quite rightly the time for our global institutes to continue helping the banking sector play its part in supporting the economic and social recovery and the changes that will flow from COVID-19. These events have taught us a lot about responsibility, whether in adapting to changes in how and where we work, how we serve our customers, the communities we operate in, and the wider needs of a society brought together whilst physically apart. And that's why we want this conference to demonstrate the challenges of building sustainable and responsible banking models and what that means for banks, bankers and society. We believe it is our institute's role to help our members understand how you can apply the principles for responsible banking in your work life, what tools you can use, and at times when customer expectations and demands are changing, we want to enable our members to develop the skills and knowledge to support their customers. Stewardship is the word our founders would have used almost 150 years ago. Today, we might say responsible and sustainable, and that's why we define a responsible banker as someone doing the right thing in the interest of society and for their customers. And the international influence and collaboration we've been building through our partnerships with professional bodies in Africa, Australia, the Bahamas, Hong Kong, India, Ireland, Malaysia, Malta, New Zealand, Pakistan and Taiwan, to name a few, and that's quite a few, has been a continued focus of the Institute. We're now proud to have both students and professionally qualified members in over 100 countries across 6 continents, all of whom share a common commitment to the Chartered Banker Code of Professional Conduct and to our global family and members. It's great to have so many of you able to join us online today for this conference. Thank you once again for your invaluable contribution in making the Institute such an important community. I would particularly like to pay tribute to our international institutes, the AICB in Malaysia, FINSIA in Australia, IIBF in India, and TABF in Taiwan. And also thank the Global Ethical Finance Initiative, better known as GEFI, and last but not least, UNEP FI, who are supporting this event for the next 3 days, and give a warm welcome to all their members and all those associated with them for joining us today. It's partnerships like this that underline the strength of our banking community, and such important relationships have been such a great reassurance to us through the uncertain times we've all experienced together in the last 18 months. Meanwhile, our institute continues to stand full square behind the development of green and sustainable finance. Having launched the Green Finance Certificate, the world's first benchmark qualification for green finance professionals, we updated it and relaunched it as the Certificate in Green and Sustainable Finance last year. And this year we launched our first Chartered Body Alliance qualification, the Certificate in Climate Risk, with our counterparts in the Chartered Institute for Securities and Investment and the Chartered Insurance Institute. We're also one of the first organisations to endorse the UN Principles for Responsible Banking, and promoting these to our members through our international networks. We further led the foundation of the Green Finance Education Charter. The Charter is a significant commitment from chartered and professional bodies in the UK and internationally to integrating green finance and sustainability into their core curriculums, new qualifications, and the continued professional development of their members. But in the light of the current health and economic disruption, has the importance and urgency of enhancing sustainable banking and finance lessened? Certainly in the short term, it probably has, as many countries' policy, regulation, and central bank activities have been quite rightly focused on the immediate health and economic recovery measures. But the impacts of global warming on individuals, communities, and how our world will evolve will dwarf those of COVID-19, which is why tackling the climate emergency remains a priority for policymakers and regulators, particularly here in the UK, where we're looking forward to hosting the Global Climate Conference, COP26, in Glasgow in just over a month's time. From a financial standpoint, central bankers have become increasingly concerned about climate risks in recent years, especially the risks of a rapid transition, stranded assets, and their impact on financial stability. And over the past year, we've caught glimpses of what the world could look like if there was a significant impairment or stranding of fossil fuel reserves. This should prompt action from financial institutions heavily exposed to high carbon assets and move them towards reducing fossil fuel exposures in their portfolios. And for the transition to net zero to succeed, and to succeed by mid-century to keep global warming to 1.5 degrees, we don't, I contend, need all bankers to become deep sustainability specialists. But if, as Mark Carney set out in his Road to Glasgow speech and the COP26 private finance strategy, every professional financial decision is to include climate change, and I would broaden that to sustainability in its widest sense, then to meet what we call the Carney test, every banker, every finance professional needs a knowledge and an understanding of climate and sustainability to the extent appropriate for their role, function, and the organisation they work for. And as the oldest and preeminent education body for bankers, it is incumbent on us at the Chartered Banker Institute to play a leading role in the development of the knowledge and skills required. And that's exactly what we're doing. So I would argue sustainable finance is more important, and mainstreaming sustainable banking and finance is more urgent than ever. Alongside the very significant commercial and investment opportunities for financial services it provides, there is an even more compelling moral case. Sustainable banking and finance is an opportunity for our banking profession to demonstrate our positive social purpose. We can and we must continue to rebuild lives and communities post-COVID-19. And we must also play a leading role in helping the individuals, communities, countries, and our planet transition to a sustainable, more socially just, low carbon world. As we look ahead, the key theme running through all we do, from our qualifications and learning, our member benefits and services to our events, will be that of responsible banking, as the world economy and society tries to rebuild in a better way from the effects of the pandemic. Responsible banking needs to be led by professional bankers, and we need to ensure that the future of banking is one that reflects and celebrates the diversity of our world. We live in a global community, and it's absolutely right that we look outwards and face into the challenges that arise from COVID-19 as well as climate change, and the roles that bankers can play in meeting these unprecedented challenges to our industry, but also to the world in which we and our families live. And these are areas that I'm sure we will touch on more than a few occasions throughout the course of the next few days. Tomorrow, we're delighted to have Oliver Holborn, Director of Strategy and Ventures at NatWest, joining us to provide a keynote speech. And this will be followed by a discussion on the importance of how the UN principles of responsible banking are being implemented by banks. But today's topic for debate is, what does responsible banking mean for organisations? So I'd like to thank you all for listening, and I'll now introduce the first of our two esteemed keynote speakers today. Our first keynote speaker is Mikhail Sorensen, CEO of Handelsbanken UK. Mikhail was appointed CEO of Handelsbanken UK in September 2016, and collectively Mikhail has over 34 years experience from the banking industry. He spent the last 26 years of those at Handelsbanken. Handelsbanken, as I'm sure many of you will be aware, is a local relationship bank built on sustainable values that is recognised as one of the strongest banks in the world. Before joining Handelsbanken UK, Mikhail worked in various roles and regions across the Handelsbanken Group. Branch manager, regional area manager in Denmark, general manager in Poland, CEO in the Netherlands from 2007 to 2016. Mikhail has been a member of Handelsbanken's Group Senior Management since 2013. Mikhail also sits on the Council of the Swedish Chamber of Commerce, which is a not-for-profit organisation aimed at supporting entrepreneurs and businesses within the Swedish-British business community. Mikhail finished a higher financial education within corporate banking, credit analysis and management, and completed the Copenhagen University Law School. Heather, would you like to introduce Mikhail?
Thank you, Steve, for your kind introduction, and good morning, everyone. I really feel privileged on behalf of my colleagues at Handelsbanken to help open up this important conference focusing on responsible banking. We have run our bank for many decades on values of placing trust in the individual, taking a long-term view in everything we do, and showing responsibility to the communities we serve. So responsible banking really is a theme close to our heart at Handelsbanken, and I believe to the purpose of banking in general. The 21st century hasn't exactly been a quiet time for our industry. The irresponsible culture and activities that led to the global financial crisis have been discussed and analyzed every which way since. The UK financial regulators have sought to put lessons into practice backed up by public anger and political consensus. Despite public efforts to improve and chart a new purpose-led course, banks and its employees have remained firmly in the doghouse ever since. The coronavirus pandemic, however horrible and devastating it has been, has provided a chance for our industry to show we can be an asset within society, particularly in time of need, helping prop up the economy, protecting livelihoods, and ease financial burden on customers. Quite a contrast to 20 years ago. As a bank that steered clear of the toxic behavior at the beginning of the millennium, this approach isn't new to us at Handelsbanken. We always put our customers at the center of everything we do, and we pride ourselves on being a relationship-driven bank where trust and respect forms part of our everyday core values. As a responsible member of society, we very much welcome this positive change in the wider banking industry, especially for two reasons. Firstly, it should be clear that we all benefit when banking in general has a good name. Trust will always be the lifeblood of banking, whoever the counterparty and whatever the matter under discussion. We all need to attract the very best talent into our sector with strong moral beliefs and from a diverse base of the population. I'm sure all of us worry about the value our work brings to society, as well as the values we are able to bring to our work. And we also care about how we are perceived by our peers. Secondly, there is only so much that one bank can do on its own to help address the many different challenges of our age. From climate change to infrastructure, social inequalities to economic growth. The task requires all willing hands on deck. In many areas, we need to work in partnership to accelerate progress towards the Sustainable Development Goals and responsible banking principle underpinning UN initiatives that we are all committed to. Now, there are some who may still question what business a bank, as a commercial entity with responsibility to its shareholders, has in taking on these societal challenges. In an essay for the Institute, I noted that it was only fairly recently that banks' perceived role in society was restricted to the purely economic, deploying capital, managing risk, creating shareholder value, creating jobs, and paying taxes. But there's no doubt in my mind that this narrow view has over recent years been widening to take in social goods such as equality, diversity and inclusion, human rights in the supply chain, environmental footprint, and combating financial crime. This widening of scope is, of course, not unique to banks, but applies across all public or private sector organizations. Society's expectations have shifted considerably, and I believe the depth, length, and universal impact of the coronavirus crisis has served to consolidate this momentum. What is different about banks is the breadth of influence we have over developments out there in the real economy. And this is where I believe the next major widening in society's understanding of banks' value will come from. Our ability to work closely with our customers, suppliers, policymakers, and professional networks to steer a collective focus, draw the right networks and resources together, and drive the kind of outcomes our communities are looking for. Though still early days, we are already seeing this when it comes to climate change. Banks have a particular role to play towards the collective endeavor in supporting society's transition to net zero emissions. Our own long-term approach to local relationship banking means that we truly know and understand our customers and are trusted by them. We are therefore well prepared to hold these kind of conversations and to support them through their own net zero transitions. We are also proud members of the UN initiative Net Zero Banking Alliance, as well as Bankers for Net Zero here in the UK. And we have committed ourselves to reach net zero emissions by 2040 at the latest. An ambitious target that include not only emission from our own operations, but also those linked to lending, leasing, and investments. I claim no special knowledge of the work going on in other banks, but from what I see, this important work appears to be well underway across the sector. However, underpinning all of this and how effectively and consistently it can be delivered by a bank over the longer term is the culture of that organization. It is often said that culture must come from the top. This may indeed be true, but at least in my experience, for a culture to really endure and take flight, it needs to be owned, fed, and nurtured by everyone in the organization. It can't just be trained in and left to take hold, nor will it be successful purely through leadership alone. I mentioned earlier that trust and respect are core parts of our values. Another fundamental part of our culture is empowerment. We very much believe that people are naturally motivated to do good things well, and people do not tend to wake up in the morning saying to themselves, "Today I will take casual decisions," or "Today I will do a sloppy work." Such things only tend to happen when people do not feel trusted, accountable, free, or supported. Our business model is very much shaped to promote this empowerment. Our local branches, for instance, are empowered to take the majority of decisions relating to their customers, as they, of course, know them best. And we encourage our colleagues throughout the bank to speak up and challenge if they see something they think can be improved. By doing so, we all share the responsibility to strive to be a better bank tomorrow than we were yesterday. Our industry has embarked on a vital journey since the global financial crisis. Through the lens of the pandemic, the public has begun to recognize the changing culture in our sector and the social value banks are able to provide. Climate change is the next and greatest test yet of our ability to work in partnership to deliver decisive environmental and social impact. It will also create a template for collaborating with stakeholders to address all manner of ESG issues as they evolve. But culture is key to lasting success in all of this. And we all know that when it comes to embedding a resilient, responsible culture, the work is never done. So thank you again, Steve, Simon Thompson, and to the Institute for the opportunity to share these thoughts. And I wish you all a successful and productive conference. Thank you.
Thank you, Mikhail, for outlining what responsible banking means at Handelsbanken UK. There's certainly many comments there that resonate with me and hopefully many of you today. I'd now like to introduce our second keynote speaker, Poulen Luigi Potele, who is the interim banking lead at the United Nations EPFI. Poulen was involved in developing the UN principles for responsible banking and currently leads the team that works closely with signatory banks and various stakeholders to support and drive implementation of the principles for responsible banking, focusing on impact and driving alignment of bank portfolios with sustainable development objectives. She started her career as a commercial law attorney, left practice to work in the legal departments of Investec and Standard Bank. Spent 4 years at Standard Bank in the corporate and investment banking business, working on property development transactions. She then moved to Standard Bank's regulatory advocacy team, where she worked with a broad range of stakeholders on policy issues, engaging with policymakers and regulators on emerging policies and legislation, including financial technology. Puleng has obtained a Bachelor of Arts, Bachelor of Laws, and Master degree in Public Policy from Wits University. So, Heather, hopefully you'll now be able to play Puleng's video.
Good morning, good afternoon, and good evening, ladies and gentlemen, distinguished guests. It is my pleasure to be speaking to the financial community today about responsible banking, a topic that is at the core of what we do every day at UNEP FI. The concept of sustainable finance has been around for many years, and the expectation for banks to act responsibly has been consistently on the agenda of financial institutions. It is clear that responsible banking is not just a market trend, it is the future of banking. Banks account for 90% of financing in developing countries and over 2/3 of all financing globally. If we are to achieve the UN Sustainable Development Goals and the Paris Climate Agreement, responsible banking practices are a necessity. Banks around the world must come on board and work with other actors to turn vision into reality. The establishment of the principles for responsible banking in 2019 was an important milestone for the financial industry as 130 banks stepped up collectively and committed providing leadership in responsible banking in partnership with the United Nations. Under this unique framework, banks mainstream and embed sustainability at the heart of their businesses through impact analysis, target setting, and public reporting. 3 key steps that make responsible banking practices measurable, accountable, and transparent. Responsible banking is about aligning business strategies with individuals' needs and society's goals, hence collectively contributing to the creation of a positive future for banking and the industry as a whole. Therefore, we innovate, we break new ground, we share and learn from each other. Instead of following trends, we create them. The principles provide a platform for banks to work together on practical guidance and pioneering tools for the benefit of the entire industry through various working groups. This allows banks to stay at the cutting edge of responsible banking while collectively forging a new path for others to follow. In just 2 years, the principles have grown from a coalition of 132 leading banks to a global community of 240 banks representing 40% of the banking industry. This certainly is very positive and encouraging, and it shows the industry's increasing commitment and dedication to a future where people, societies, and the environment continue to prosper. However, to make responsible banking a success, more commitments and more actions are needed from each and every one of you. The global banking industry must come together and act collectively in response to our most challenging priorities. The recently published special report from the Intergovernmental Panel on Climate Change once again puts the spotlight on the catastrophic speed at which climate change is taking place. Some of these negative impacts, such as sea level rise, are irreversible for at least several centuries. Current efforts to curb global warming are deemed insufficient if we are to achieve the targets or the goals of the Paris Climate Agreement. Therefore, ladies and gentlemen, it is now time to commit. It is time to take urgent action. Analyze your bank's portfolios, understand the impacts you are driving in the real economy, and drive change, drive tangible change through setting of targets that are measurable. The success of responsible banking depends on every single bank in the industry. Every bank needs to play a part in delivering low carbon, nature positive, and inclusive economies. I thank you.
Thank you, Peleng, for your very insightful words about the UN principles for responsible banking and the importance of them. I'd like to reiterate Peleng's remarks that the success of responsible banking depends on every single bank in the industry. Every bank needs to play their part in delivering low carbon, nature positive and inclusive economies. But I go one step further and state that to achieve this will require every individual working in banks to play their part. And that's what we hope this conference will leave you thinking about. I'd now like to hand over to our Managing Director, Giles Cuthbert, who's chairing today's panel discussion on what does responsible banking mean to organisations. Giles, over to you.
Thank you, Steve, and good morning, everyone. I'd first of all like to say thank you to our panelists for agreeing to participate in this Chartered Banker Institute online panel discussion, which I'm delighted to chair. On behalf of our institute and personally, thank you for giving up your time to share your expertise on this important subject with us. I hope we can hold a thought-provoking and stimulating discussion on, amongst other things, what does responsible banking mean for organisations? As Steve mentioned, I'll be chairing the panel, and the panelists are Arnaud Cohen-Stewart, who is Head of Business Ethics at ING, Sasha Courville, Executive Social Impact at National Australia Bank, and Benny Miao, Executive Vice President at Cathay Financial Holdings. As your chair, I'll be doing my best to provide a practitioner, professional body perspective throughout. So I'm going to briefly introduce you to each of the of our panelists, and then we'll move on to about 45 minutes of discussion, and there'll be an opportunity to give some ask some questions towards the end. Responsible banking has become a well-used term in recent times, particularly in the light of the banking sector's response to COVID-19 and in the run-up to the United Nations Climate Change Conference, COP26 in November. A lot of banks and other financial institutions use the term, maybe as part of their organizational purpose or in the context of their environmental, social, and governance strategy. But what do they really mean by it? And what is at the heart of responsible banking? So today we're going to look at what responsible banking means to different banking organizations and how it may or may not form a key part of their strategies moving forward. So as I mentioned, today I'm joined by Arnaud Cohen-Stewart from ING, Sasha Courville, Executive in Social Impact at National Australia Bank, and Benny Miao, Executive Vice President of Cathay Financial Holdings. So first of all, I'd like to give each of them an opportunity to introduce themselves. So Arnaud, would you like to start, please, by giving a bit of an introduction?
Yes, most happy to, and thank you very much for the invitation. I'm delighted to be here with you today. I'm also actually looking forward to the Q&A session at the very end. I started working for ING quite a while ago. I think it was 15 years at least I've been in the sustainability domain, heading up the business ethics team in the global sustainability domain, working on stakeholder dialogue and advising the executive board on any reputational sensitive topics linked to the banking transactions that we have. And as such, I've been involved in developing stakeholder initiatives like responsible business conduct agreements. I've represented at ING at the national contact point in mediation processes over the OECD guidelines, and manage a public response in response to, for example, concerns expressed by society over the topics that we finance, the issues that we finance, the clients that we finance. And as well, I'm representing the Dutch Banking Association in a dialogue session with the Dutch government and advising them on RBC policy, responsible business conduct policy.
Thank you, Arnaud. Sasha, could I pass over to you next, please, to introduce yourself?
Sure. Hello, everybody. It's a wonderful pleasure to be here, and I also really look forward to the discussion and the questions as well. I have been working at NAB for about 10 years. Now, I initially was an academic, a consultant. I've been many things in the sustainability sphere, but I joined NAB about 10 years ago to initially pick up the work on natural capital and how do we think about biodiversity and ecosystem services and integrate them into business decision-making structures. And as the largest agribusiness bank in Australia, there's a really critical link there from a natural capital perspective. I've done a lot of other things across the bank, but at the moment I coordinate our Sustainability Council which helps to articulate the long-term pillar of our group strategy on driving commercial response to society's biggest challenges. And that also includes our response to climate change and driving climate action.
Thank you. And Benny, could you introduce yourself, please?
Good morning, everyone, or good afternoon for those around the world. Pleasure to be here, and thank you very much for the opportunity. So I'm Benny Mikhail, work with both Cathay United Bank as well as Cathay Financial Holdings. I hold dual positions. One is I actually did oversee the corporate finance department of Cathay United Bank, which really spearheaded a lot of the green financing initiatives that we have amongst Taiwanese banks, as well as most recently in Taiwan, where we had a lot of offshore wind financings. Cathay United Bank has been one of the leaders amongst the Taiwanese banks in arranging those type of solutions. In addition to that, we also at Holdings, I'm also head of their post-investment management, where we also create and also integrate a lot of our ESG mindset into our investment companies and investing companies. So we're really driving that forward, sort of downstream within our system.
Thank you, Benny. And staying with you, Benny, if I could start with you for the first question, please. I'd like to start by asking each of the panelists to give a summary of what responsible banking means to their organizations.
Okay, great. As you can see, our logo is a big green tree. Okay, so I think that goes how important it is for us in terms of the environmental and social aspects of the initiative. Now, our president, C.K. Lee of Holdings, has termed the phrase sustainable DNA. And that's what we really want to drive within all of the Cathay verticals. And we have realistically three main verticals. One is the insurance side, one is banking, and the other one is asset management. Okay, so just for an example, on the insurance side, we were probably the first Taiwanese insurance companies to sign up to the PSI, the Principles of Sustainable Insurance. Okay, we signed up to that in 2016. Cathay United Bank was the first Taiwanese bank to sign up to the Equator Principles in 2015. Okay, and our asset management side has a subsidiary whereby we signed up to the Principles of Responsible Investment back in 2015 as well. And so that basically symbolizes or crystallizes how important, how early, I would say, Cathay has began thinking about sustainable or responsible finance, okay, within our institutions. So we really do see it as a core piece, or DNA, as our president calls it, part of the Cathay DNA now, okay, going forward. So for us, everything we do, all the new markets, all the new products that we want to provide from the insurance side, investment side, banking side, always has our ESG element involved. Okay, as someone was mentioned earlier, is that in all aspects of what we do, we are constantly factoring the ESG factor into it. Okay, so it is a very critical piece for what we do going forward.
Thank you, Benny. And I really like that phrase, sustainability in your DNA. I think that really says a huge amount about your approach. So thank you for that. So moving on to Sasha, what does responsible banking mean for your organization, please? Sure.
So I think kind of Benny's comments about how it is becoming absolutely embedded as a core part of the DNA of Cathay is a really good example, and it's one I think that kind of is coming across in all organizations. It's certainly critical for ours. If I go to kind of the reason why we're here as a bank for the National Australia Bank, our strategic ambition is very much to serve customers well and help our communities prosper. And so at the core of that, serving customers well goes beyond just delivering a great customer experience, which of course we want to do, but beyond that, it's really around how do we think about challenges our customers are facing? How do we ensure that we're providing inclusive banking? How do we support customers who may be experiencing vulnerability? And how are we proactive in our support when customers enter hardship? helping communities prosper is a powerful ambition, and one that I, in my role as Executive for Social Impact, am very strongly connected to. But it's also an outcome of one aspect of our business strategy, which is really to look and act now for the long term. And I'll hope to come back to that in a little bit later. We've also really embraced the principles for responsible banking and are working through particularly the impact analysis work in the target setting, which I think is going to transform the banking industry in many ways. Also, as I mentioned, we signed up to the Natural Capital Declaration about a decade ago, and have been working through kind of our obligations under the collective commitment to climate action, as well as some of the key, I guess, pillars that we align with and hold ourselves to in terms of how we implement the work of the bank in terms of responsible banking.
Thank you. And I think it's really interesting to think of sustainability in the context of prospering communities as well. So thank you for that. Arnaud, would you like to comment on this one as well, please?
Yes, please. I think considering sustainability is really thinking about who we are and where we can have the biggest impact, addressing the biggest challenges. And given the DNA of the company and given who we are and the client base that we are a fairly large wholesale bank as well as a retail bank. We choose two pillars mainly, one being climate change and biodiversity, and the other being financial health and human rights. And so one is very environmental focused and the other one is social focused. The good thing about that, what I like about that, is that within wholesale banking, you really have to think through the impact of, for example, climate change on the lending book, as well as a lending book on the climate. And for the retail banking, it's really the way how you see that you can help develop people to become to improve their financial stability and independence. So for both client sides, we seek to address sustainability issues the best way we can.
Thank you. Well, that was great. Thank you. So moving on to the next question. What are the components of responsible banking, and how do these fit together, and how does your organization's culture align with sustainability? So Sasha, would you like to start with that one, please?
Sure. I think there has been a very strong focus on thinking about how we can better support our customers over time. And so just thinking about the principles for responsible banking, the core one among clients and customers is what I would start with, and really think about, well, how do we not just meet customers' current needs, but how do we meet their current sustainability needs and think about what are their emerging needs into the future. And as part of the work that we did in a refresh of our group strategy a year ago, we embedded sustainability into the strategy through that long-term that I was referring to. And in there, it's really looking at where can we drive commercial responses to society's biggest challenges, leveraging the full power, weight, and assets of a large commercial bank to be able to deliver on sustainability challenges, and the areas that we really focused on there through working through the principles for responsible banking kind of portfolio analysis pilot, as well to really reinforce and support that, is really around climate change, affordable and specialist housing, and Indigenous businesses, and really supporting the growth and the prosperity of Indigenous businesses in the Australian context as a key way for development and reconciliation in our country. And so I think that hits off the alignment component of responsible banking in terms of how do we ensure that our strategy is well and truly focused on ensuring that we're meeting society's biggest challenges. And then I think the other components of a the principles for responsible banking flow from there. As I mentioned, the impact analysis work is really critical, and in being able to quantify and focus on positive and negative impacts, and to develop mechanisms by which we can track progress and then report on those, and feeding in that feedback loop. Key elements there in terms of governance and culture and stakeholders. And I think stakeholders is an interesting one, because we're not none of us can address sustainability challenges on our own, right? And so it's thinking about how do we work with governments, how do we work with clusters of customers at a region or across different sectors or within a sector, how do we work with civil society to in new ways to drive the outcomes that we all need to see.
Thank you. I'm glad you mentioned positive impacts there, because we tend to focus on negative impacts, rightly so. It's critical we deal with them, but hearing about positive impacts as well and how we can engage in that direction is really useful as well. Thank you. Arnaud, would you like to go next, please?
Yeah, I would typically also address it through two lines. One, of course, the mitigating harm and trying to prevent the negative is a key pillar. But indeed, the positive contribution that we can make to society in sustainable finance or by other means and other programs, I think is really important. But your question really was about culture, how to get there. And as Sasha also described within her institution, I think what we recognize in our institution is that to be able to face those challenges, you really need an open culture. You need to be able to discuss these challenges in a very open and critical manner, to be able to challenge each other. And if the culture is there, that you are allowed to be very open to each other and challenge existing business models and considering alternatives in a very professional way, seek to understand dilemmas and assess risk. I think only then, and also with a bit of innovative flavor, we can think of next steps that we really need to drive sustainability. What is really interesting about sustainability, it's never going to be done with. This is a moving target, so we have to remain agile to be able to understand it, and also to live upon what we need to do.
Thank you. Benny, obviously a question about culture here, which you've already mentioned, but it would be interesting to explore that a bit further with you, please.
Please, thank you. Actually, I'd like to echo what Arnaud was saying is, from a holding standpoint, is we actually have a corporate sustainability council or committee that was formed back in, I think, 2014-15. So it really, as Arnaud said, it really starts from that core top. And from there, we've actually, allowed that committee which consists of all the BUs, or the heads of BUs. So therefore, the life would, sort of, not I wouldn't say challenge, but sort of, discuss what initiatives that they're doing and something that maybe the bank side or the investment side, the management side could also learn and follow. So I'd like to also highlight a few things that we've done in terms of as an example of the culture, where, from as simple as our we launched a financial education, you want to call it that, to help baseball players. So in Taiwan, we have a professional league baseball teams where a lot of them actually historically have come out with, I wouldn't say money trouble, but a lot of them really don't know how to do proper financial management or budgeting and whatnot. So we've actually launched that program initiative with the government of Taiwan to help provide that kind of resource and training to these professional players to help them, enhance their financial budgeting and financial education on that element. On the other side of it, for the elderly, our trust and our insurance side have created customized products, solutions to target the elderly or the vulnerable, so that they are presented with and are investing in appropriate investment products. Okay. And lastly, as I mentioned before, we are, from the lending side, very big proponents of sustainable financing. Okay, we've also have publicly stated that we will no longer finance coal-fired generation. Okay, so I think we're probably one of the first Taiwanese banks to do that. But we are big proponents of financing sustainable green financings throughout Asia and Southeast Asia in particular. So we're looking at renewables in Vietnam, renewables in Indonesia, obviously in Taiwan as well, et cetera. So we're definitely, again, pushing the positives as well as more so, and then trying to limit the negatives.
Thank you. So next, I'd like to discuss. We've seen a lot of shall we say, turmoil in the world over the last couple of years as a result of COVID-19. And what I'd like to explore next is how has COVID-19 impacted on banks' responsible banking priorities and activities? Arno, would you like to start on that, please?
Yeah, I think what we see happening is that COVID really created a sense of urgency to jointly tackle societal topic, COVID, for sure. What interesting was that in the very beginning, everyone was really trying to understand how to develop and roll out the vaccines. That was the key priority. And you saw a clear participation between government and the private sector to help that happen, to make that happen. From the corporate perspective, also the ability to adapt the operations in such a swift moment of time was amazing, and also indicated that what we thought would take years to develop, digitalization, for example, could be done within literally weeks. Within weeks, larger corporations, and including the banking sector, with 90% of the employees was just working home smoothly. And we never thought that would be possible beforehand. So apparently, if there is a sense of urgency, we can act. Another thing that we saw happening was the focus of the corporate agenda being very much on the employee well-being. We very well understood that this change was a huge impact to our employees. Working from home, they had to miss the colleagues, the framework, the structure of the daily work, and also new challenges of the family around, and particularly if you have small children, for example, or you're all by yourself, which is can be equally impactful. So employee well-being was suddenly very high on the agenda of the corporate community, which is interesting. And even so, we did a bit of a research, and out of that research, it stated that 33 of the corporates now put health and well-being of their employees first, even above emission reduction at 30%, and slightly above the to address responsibilities in supply chain. So employee well-being was suddenly, boom, right up the agenda. Also, the notion from governments that all these recovery packages, billions and billions pushed into the economy, that provided an opportunity to also steer the economy, to have a say in the economy, and therefore to address, for example, climate change through those recovery packages. Now, what I'm really getting at is that on the one hand, you see that government tries to tackle all kinds of interests in society, like failing healthcare or inequality or climate change, using the opportunity provided by the COVID crisis, if I may say so, and the recovery packages, for example. And corporates were then a means to an end to address societal issues. On the other hand, corporate acted in societal interest because it was also in their interest now to really understand employee well-being, for example, and to work along with governments on vaccinations, on health and safety, and also on climate change. Moving into the political domain, really. So what we see is that they get more and more intertwined. They get closer to each other. The expectation of the public is on the rise. Public really expects corporations to act in the benefit of society. And therefore, politicians feel that they get support, public support, to now also draft legislation and policy restrictions. So that, I think, is a major change due to COVID. There was a clear sense of urgency to work together. There is a clear understanding that the business community can help address societal issues. And now there is also a clear request coming from that to do so, which will be embedded in law. And I think that the combination of those actors really makes that businesses now also feel and understand that they have a more strong role to play in addressing societal issues, pushing topics like employee well-being, climate change, and supply chain risk analysis higher on the agenda.
Thank you, Arno. That's a really fascinating perspective, and it is always good if something positive can come out of such a dreadful event as well. Benny.
I appreciate that. For us, I think, from a business standpoint, I think it just crystallized the importance of the sustainable part. Because the impact and the vast impact that COVID had across the board, it didn't discriminate against anybody or anywhere. Okay, I think that was one. I think for us and for me, more specifically, as I oversee our Southeast Asia offices, I think one of the things that I sort of took away, or lessons learned really is how the varying preparedness was amongst the different markets. Okay, some countries, maybe they're a bit overconfident and they didn't think COVID was going to hit as bad. There wasn't much urgency as getting the stockpiles of PPE ready, the masks, the gloves, etc. Others, there was much high sense of urgency. Okay, so I think for me, it's realizing or recognizing that there was a large disparity in terms of the various markets, and from us, from headquarters, I call that, is understanding how do we manage that, and how do we manage it going forward, regardless if it's COVID or whatnot. So for me, the COVID-19 impact, not only on one side of this business, on the other side, more operational, but it was a lesson learned.
Thank you. And Sasha, would you like to comment on this, please?
Sure. I would just kind of echo everything that Arnaud and Benny have said. I do think that actually, and I think our first keynote speaker flagged this as well, is that really COVID-19 has allowed and enabled the banks to step up in terms of being able to demonstrate strong, responsible business practices. And I think it's interesting. I remember at the early stages of the pandemic, there was, among the sustainability professionals, there was a concern that sustainability would be kind of put down, and while we focus on the absolute kind of issues of the day and the economic challenges, as well as the health challenges at an economy-wide level, but that actually wasn't the case. And partly, I know referenced the stimulus packages and being able to kind of drive that, but we've only seen broader ESG issues grow in importance throughout the pandemic. It hasn't slowed down at all. It's just continued to grow exponentially. But in terms of the traditional conception of responsible banking and how we support customers through kind of economic turmoil, we've seen shifts around hardship and vulnerability. Obviously, personal bank customers who have been impacted through loss of income, or small, medium-sized businesses, particularly having real challenges with lockdowns. And we've seen shifts in customers experiencing vulnerability. So, for example, domestic and family violence is kind of a fairly significant issue for customers experiencing vulnerability. And that shifted because in lockdown, you had less kind of requests for customers to support because they're not able to move, right? And so those kinds of shifts were interesting. So how do we need to respond to those? Ramping up customer assistance, loan deferrals, things like that were absolutely critical at the time, but also a whole sector, like a whole bunch of customers who were experiencing vulnerability for the first time and not used to and not knowing where to access support. So that kind of required us to think differently and support that as well. But I mean, other opportunities in terms of I'm sure there's lots of discussions around the world around how do we really support kind of vaccine rollout, and there's lots of spaces for corporates to come in and play, have a voice in those discussions, and how do we encourage increased vaccination rates. And we had a campaign within our colleagues around give a jab, get one, give one, essentially raising money. So if colleagues were able to get vaccinated, we would contribute money to a UNICEF campaign to provide vaccinations in the region, in neighboring countries as well, and just little things that would encourage people in a positive way. We also, I mean, this is an interesting tweak in terms of what Arnaud flagged in terms of the ability of organizations to respond rapidly. Well, an interesting side of that is, from an operations perspective, we always kind of minimize our greenhouse gas emissions, but we also offset what we can't. And so for the first time, we looked at, well, how do we address emissions from our colleagues working from home, and how do we incorporate that in? And we did that for the first time in 2020, and we will continue that from here on in with a more flexible way of working. So there's interesting little opportunities that pop up at the same time.
Thank you. Well, moving on to the next question, we heard Arnaud there a minute ago talking about sort of how environmental and social aspects were coming together in the response to COVID-19. But in this question, I'd like to ask, with environmental and social and governance goals associated with responsible banking, do you see one of those aspects as more important than the other for your own organization? Or do you see them sort of so closely interconnected that they all have to come together in a package? Benny, could you lead on that one, please?
Okay, thank you. I think that's a very interesting topic. I think it goes a lot of different ways, but for us at Cathay, I think the G part takes a little bit of a lead, okay, ahead of the ENS. And the logic really is if you don't have a strong governance, then I'm not sure if I believe in your E and your S, okay. And then coming from a framework whereby a holdings, we look at both the investment side and the lending side. The governance of the management team that we're investing in and the governance of the borrower are very, very critical to us. Okay, so we have to have belief that either the investment, that the underlying governance quality is there, okay, before we can actually take it on to the next step, which is the E and S part. So for us, I would say the G part is in the lead, but albeit in a very, it's very close.
Thank you. That's really interesting as a perspective. Arnaud, would you like to comment on this next? Because you had a lot to say about it in the last question, which was
Obviously, I've been thinking about this kind of questions on forehand, but now Benny is making an interesting angle to it, which makes me think, in all honesty, putting the G first. It's not what I wanted to say, but you might be right from the perspective that nothing happens without the G. But we would consider it as an enabler, and focusing particularly to understand the E and the S, and so where can we contribute the most with regard to the environment and with regard to social issues, and then the G would be an enabler, but probably they need to be on equal par, all three at the same level, because you can't do one without another. And I think the most interesting concept thereof is the following. Not that long ago, we've seen several court cases in Europe against government and against corporations on climate change. And the considerations made by the courts was not that either government or corporations would violate climate change regulations. The considerations made were that they're really violating human rights while ignoring climate change effects. So these topics are very, very much intertwined, which makes total sense because one affects the other. So I would say E and S equally important, and we can't do without the G if we want to do anything meaningful.
Thank you. And that human rights aspect is something that I think is not taken into account quite enough with this. And as you rightly say, it can end in the courts as well. So banks do need to pay attention to that. Sasha, would you like to take this one next, please?
Sure. My view is that they're interconnected and they're not mutually exclusive. And so I think you need to pay attention to all three. I think there is a broader history of corporates and banks focusing on governance issues. It's been a topic of focus for a longer period of time. I think climate changes the ballgame for everything, and it becomes the all-pervasive issue that cuts across every single customer segment, no matter where you are, who you are in the world. It is already impacting people, and it will continue to impact people for decades and hundreds of years from now. So I think it becomes all-pervasive, and it's connected to governance as well as social issues in fundamentally challenging and interesting ways. So I think the focus of attention on climate that we're seeing allows social issues to grow in importance as well. There's a space that's created from climate that brings other issues in. And so I think social issues will continue to grow in importance, and there's a great space for that. We're seeing already I mean, we have a task force on nature-related climate financial disclosures off the back of the TCFD, right? So broadening of issues from that. There's kind of emerging collective commitments to financial inclusion kind of off the back. So the infrastructure, I guess, we have to address climate is being used to lift other societal issues on the S side anyway as well.
Thank you. Now, the next question we may want to approach with some circumspection in some regards, but it's about politicians and whether they are ahead or behind the thinking of organisations' strategies when it comes to sustainability and sustainable targets. Arnaud, would you like to lead on that one, please?
Yeah, and it's so tempting to say they're behind, isn't it? But I think it's absolutely unfair to do so. They were, absolutely. In the very beginning of the sustainability domain, and let's talk 10, maybe 20 years ago, let's face it, this domain wasn't driven by governments. Governments didn't have an eye for it, they didn't even care. They were lawmakers, and this is in the gray area that there is no law applicable. I always used to say sustainability is about going beyond the law. So by definition, the government had nothing to do with it. This was the domain of your interaction with your clients and your various stakeholders, like the civil society organizations, maybe academics, maybe concerned investor, one or two. That was the domain a decade ago. Well, what we saw happening over the last 5 years is that government really made up for lagging behind 10, 20 years ago. They're stepping in fast. And when you talk not only sustainability, but sustainability targets, there you get the governments in a really, really strong position, which is much appreciated, by the way, because it does create level playing field, and it also creates impact that maybe one company by itself would not be able to have. So I think it's also very important that they do. We saw it happening in the UK with the UK Modern Slavery Act. We saw it happening in France in 2017 with due diligence legislation, Germany over summer, due diligence legislation, actually the European Commission considering due diligence legislation, and the first draft proposals will be launched later this year. Governments are really stepping up their efforts. Taxonomy, transparency regulations, due diligence, and all that, supply chain understanding. And what about the whole climate agenda with the 2030 approach, targets set? There we are. I think they're really stepping up the effort, and companies should acknowledge that they are a player at the table. They weren't there 5 years ago, they are now, and they're really at par of where we need to go on sustainability, and many times beyond.
Thank you, Arnaud, and that's a rare moment when we hear someone speaking up for our politicians. So thank you for that. Sasha, would you like to comment next on this one?
I think it depends a little bit of where in the world you're situated. I think Arnaud's examples are all brilliant, all European examples. And I think we do need government leadership, and I think the leadership of governments in Europe is absolutely critical to getting really strong outcomes globally. I think Australia has some interesting challenges, being historically a heavily fossil fuel focused export sector based economy, which creates unique challenges in terms of how to chart pathways. I would say that I think regulators all over the world are very much focused on ensuring that the financial sector plays a leadership role in addressing sustainability challenges, not just climate change, but including climate change. And so I think that creates unique dynamics and opportunities, lift and an absolute need to move. I think banks are in a unique position to address sustainability challenges because to some extent, we sit in the middle of an economy and we touch all different sectors of the economy. And so there is a critical need for the financial sector, for banks to show leadership, but how do you lead when you're focusing on your customers? Right. And so it's not the same as in other sectors where you're focusing on your own operations or your supply chain. The biggest impacts we have is how we support our customers. And that requires soft tools, leading by examples, and insights, partnerships, collaboration. And there's a huge opportunity to lead.
Thank you. Yes, and good not to forget the role of the regulators in there as part of the political system. Thank you. Benny.
Thank you. I'll have to tread a little lightly on this one, but I have to echo a lot of what Sasha said. I think for us, it's Cathay's move into the green space, we'll call that, back in 2015 was really our own. But I think a little bit what Arnold said is that our government in Taiwan has actually caught up, or really reduced the gap, in the sense that they've been a big push and driver of the green initiative in terms of the renewable energy space in Taiwan. Hence, because of that, the whole value chain followed, right? The financing structures, the green initiatives and all that. And I think the opportunity for the government side really is to continue that momentum and to really change how the whole green initiative or sustainable financing is viewed and treated within the whole regulatory environment in Taiwan. So I think for that, I think there is a great opportunity for both the regulator as well as the banking system. Okay, I think there's still a lot of our peers in Taiwan that have not really, I wouldn't say fully embraced it, but probably fully implemented the change or executed on the change. But some of it may be a bit of waiting to see what the governments do, or what policies or what allowances governments or regulators provide them. So for that, I think there is an opportunity for both sides to really do more. But I must say that where we are today, I guess to say politics has been behind, but more so catching up.
Thank you. Well, I'll move on to something less controversial now, which people will be able to answer. And that is, essentially all the time with this agenda, we're looking for the future, and it would be interesting to get your views on the extent to which responsible banking can make banking a more attractive career choice for young people. It'll be interesting to get your perspectives from your countries, because in the UK, banking is not a preferred career choice. So hence we tend to think about, can we get young people interested in it again? But I'd be really interested to hear your perspectives on that, and particularly the role responsible banking plays in that. So Sasha, would you like to begin, please?
So, I mean, I think it's an absolute yes. Like, responsible banking can and will and needs to make banking a more attractive career choice for young people. It's really the only way forward to attract and retain the best talent, right? There is no other way. And we've seen it's a critical part of our building our growing colleague value proposition. It's significant in our own research and that of our own providers. Candidates are being more selective about kind of where they want to work. They want to make sure that there's a higher purpose, that they're making a difference, and that has to involve responsible banking as a core underpinning for everything that we do. I think in recent kind of grad intake kind of interviews and discussions, 100% of people explicitly flagged ESG and particularly climate as an absolute focus for them and a key determinant in terms of where they would kind of end up in terms of their next job. And it ties back to kind of why we're here, and we need to be able to demonstrate that we're serving customers well and that we're helping communities prosper. So I guess that also ties back to the metrics and the transparency and the reporting of the principles for responsible banking, because you have to walk the talk and you have to be able to demonstrate it too.
Thank you. Benny, what are your views on this, please?
For us, I think overall, yes. I think the answer is yes as well. For what we see though is a bit of a yes from two factors. One is the fundamental: are you offering something better for the environment? Being able to do renewable financing, green financings. So that's an attraction in and of itself. The second factor we see is because as an institution, we're trying to implement new business strategies to address a lot of these ESG concerns. For example, digital banking, right? We want to decrease our CO2 footprint. So therefore we're trying to decrease our size of our branch sizes and the locations and trying to go digital, right? Because of that, we have a huge need of recruiting in the fintech space. Okay, so hence we are then attracting talent that would normally go to, say, a tech company to a finance company, right? So we're definitely broadening out the talent pool. In addition, giving more opportunities as an alternative to graduates and whatnot. So I think for that, I would still put it as the same answer in the sense that responsible banking, because you need to, of the new strategy you're going to implement, you are inherently going to provide opportunities or new opportunities to another pool of talent that probably historical old school banking, brick and mortar style, probably would not have attracted. Okay, so I think for us, definitely.
Thank you. And Arnaud?
Well, yeah, really quick. If people want to work for a purpose-led company, you better become a purpose-led bank. And I think that says it all, and it combines a bit of the previous speakers, both of them.
Thank you. And Arnaud, I'd like to ask you the next question too, which is, what would you like to see from COP26, and what do you think we might expect to see?
Well, that's an interesting one. In the previous question, I was very positive on the position of governments driving legislation, and Sasha put it nicely into context in some sort of parts of the world. But in a global environment as COP26 is, obviously there's a lot of challenges to be addressed. We all understand we need to move the needle on climate change and addressing climate change. But there is a slight concern because currently we're very much behind. We're very much behind on Paris. We are not even close to the ambition 1.5, let alone its formal target well below 2. And on the table is to get to 1.5. And we really need government to help society. We can't give it into the hands of the banks. We can't give it into the hands of the corporate community or to citizens or anyone else. This is a joint effort. We need government policy and guidance to help us to know what to finance, what not to finance, what the steps are going to be in the next 5 and 10 years, and to be able to plan ahead jointly. I think society needs capital to make this transition happen. And we would love to have guidance on how to allocate that capital most efficiently, which choices are to be made. And that is really a very political choice to be made, because ultimately the transition will impact the economy and will impact our daily lives. And because it is so very much in addressing or impacting our daily lives, this is really a political domain. We shouldn't leave it to the corporations. We are there to help. We must play our role, but this must be a joint effort as well. So I would love to see governments to step up, come to an agreement, focus on 1.5 and make it happen through policy, and also implement that in national law. Guide the economy from that perspective.
Thank you. Benny, would you like to give your views on this one, please?
I like to say I don't have any expectations, so therefore I won't be disappointed. But it's really what I was saying is I just want to have a understanding where, is there a consensus? Can we have some type of consensus out there across globally so we know what direction we're going? I think right now a lot of it is a makeshift or constantly changing, and it's tough to plan in that kind of environment. Okay? So I think for us in the banking sector, we just want to have some understanding of where things are going, and where do we want to take it, and then how do we facilitate that? I mean, what role can we play in getting or achieving that ultimate end game?
Thank you. And
Sasha?
Just a couple of quick things. Being an eternal optimist, which I think one has to be in the sustainable field, I'm hopeful that the exponential kind of focus of attention we've had on climate in the last kind of 12 months, even 6 months, hopefully that translates into kind of more significant agreement and faster agreement at COP26 that we've seen in previous discussions. So I'm hopeful that will translate somehow. I'd love to see, and I think that the latest IPCC kind of report highlights this, is while we really do need to continue to focus on reducing greenhouse gas emissions to get to net zero by 2050 or earlier, we have a lot of climate change already baked in. So how do we start to think about adaptation and building resilience into key sectors? Because it is impacting us. You think about vulnerability assessments in key sectors, kind of property, infrastructure, agriculture. We need to move on the adaptation side as well.
Thank you. Now, I'm conscious time's moving on, and we've got questions from the audience that I'd like to move on to. So first of all, I'm going to ask you one last question from mine, and then we'll move to the audience questions. And that is, apart from your own countries, are there any other areas in the world who are doing responsible banking well that you think we can all learn from? Arnaud, would you like to start with that, please?
Yes, I'll keep it brief then. I think there's two examples that I would like to mention here. One being Austria, because they really, from a government perspective, try to address climate change in the assets that they hold on pension funds, for example, trying to make the calculations on the impact of their pension funds, the investments that they're making, and how to align them with well below 2 degrees or maybe 1.5, but how to align them with climate change goals. I think it's very, very positive that the government takes responsibility for the assets that it puts in the economy and seeks to align it with climate goals. And the other example I would like to mention is Japan, where there is a clear drive to get central banks, accountants, governments, banks, all at the table to jointly discuss societal topics. And I think in a facilitating role, a convening party role to bring parties to the table and to get to discuss these issues is a very strong beginning of a joint responsibility and a joint agenda.
Thank you. Sasha?
Well, I would just highlight that I think there's some really interesting opportunities to form alliances across banks, across sectors. So one of the things that we're involved with is a global banking alliance with Canada's CIBC, Brazil's Itaú, Unibanco, and NatWest in the UK. And those examples, and I'm sure there's lots of them, are really great because you can share best practices from different jurisdictions and economies and really build out. Like we've launched a project Carbon, really looking at kind of how to bring efficiency, liquidity, and global standards to carbon offsets kind of markets. But it works because we're bringing different perspectives from different countries. So it's more of a kind of, as opposed to a region, a type of collaboration for learning and best practice.
Thank you. And Benny?
Yeah, I wouldn't have any specific country I like to mention, but it's more what Sasha's mentioned is we look at what different people are doing, what peers are doing. And from the banking side, I reference Japan, we are looking at, for example, Mizuho has an eco financing program that they've launched primarily for Japan, but we're also trying to see, is that something that we could work with them to bring out, to a wider audience, to the rest of Asia. And on the investment side, we also look at someone like APG, the Dutch pension, who really uses a lot of their resources to push that ESG initiative, right, in terms of what they invest in. So I think we could definitely learn from all these stakeholders and players in the space, in the financial space. But I wouldn't be able to pinpoint any particular country that I think is of a highlight.
Thank you. So I'd like to move on to the audience questions now, and I'm conscious of time, so I'll get on to these quite quickly. The first is from Linda Amanda. What strategies, oblique go-to-market initiatives have the panelists executed from a retail banking perspective for banks to collaborate or provide sustainable solutions for clients? So thinking about retail banking initiatives or strategies that you've seen. Benny, would you like to start on that?
Yeah,
I'm
not best place because I'm not by best place because I'm not really, the only part of retail banking for us that I could really speak to, because that's not the area that I cover, is that the fact that in the product offerings that we're offering our retail client space, regards to private banking or high net worth or mass market, we definitely take the social aspect into consideration in terms of what products we should offer, right? For example, offering credit cards, should we offer that to a 12-year-old, right? Or should we limit that to only a certain type of age group, or a college student that has a limit, right? So everything that we do in our product offering, we definitely have that social sense of responsibility element to it. So we're not offering one card that is a one size fits all type of mentality. As I alluded to before, in our trust department, our investment side, insurance, we are customizing investment products specifically for elderly, right? So they don't sort of invest in products that are too aggressive or whatnot. So for us, in the retail space, that's realistically the mindset that we're taking and approach to it.
Thank you. Sasha, do you have views in the retail space?
Yeah, it's a space where we're just kind of building at the moment. A couple of examples. Obviously, banks all over the world are working on kind of financial health solutions and apps that enable kind of behavior change and nudging to encourage kind of better kind of spending, borrowing, planning, and investment. So I think there's a lot of innovation in that space, us included, that we're doing a lot in that space. From an affordable housing perspective, we've done a lot of work in partnership with government on kind of looking at how do we kind of support kind of challenges around finding the ability to get the deposit needed to get a first home. And so participating with government in a first homeowners deposit scheme initiative that actually creates greater access to people looking to be able to get into the housing market. We're also doing a lot of work just at the moment on working through kind of shared equity models and how are we able to deliver that at scale. There's also, we've done some work on and have a green term deposit product, which term deposits you wouldn't think would be the most exciting products, but being able to link that back into renewable energy investments can actually totally revitalize something that would be a pretty standard product.
Thank you. And Asmo?
Recognize a lot of what has been said. Financial health, yes, absolutely working there and providing tools and training to make better financial decisions, to help our clients to make better financial decisions. Working in the market space for the mortgages, trying to green housing portfolios, addressing climate change. But I have to be very honest here, it's extremely tough to change behavior. And that's actually what we're after. Financial health is about behavior, and addressing the climate crisis through a mortgage portfolio is also about behavior, because you have to change your house, you have to isolate it or improve it or whatever, meaning you need to allow some people in for a couple of weeks to do the work. And no one like us likes to do that. It's often not about the money even, it's about knowledge and behavior. And it's extremely tough to steer that behavior. So I think this is a brilliant question. Sustainability started off in the wholesale banking domain, I would say, or at least the last 15 years or so. And it's been swiftly developing into financial health, and it should be. I also feel that we're struggling to get it to fly even higher. And very good examples have been provided and good programs there, but I think there's more to be done. We struggle though how to understand how. But the dialogue needs to continue on that side. So thank you very much for that question.
Thank you. And the next question may not have a terribly speedy answer, but it is regarding project funding and whether banks have to strengthen their due diligence processes as a result of responsible banking. Who would like to lead on that one?
Clear answer and very short, and the answer is yes.
Would anyone else like to comment?
I think Arnaud answered the question. It's absolutely clear that is needed. And there are kind of various tools like the Equator Principles to build upon, but I think kind of our frameworks and tools need to be strengthened as well.
Thank you.
I agree with all the above.
Sorry, carry on, Benny.
No, I was just saying I agree with all the above.
Another question, which was it was actually addressed to Benny, but I think it would be interesting to get all your views on it, and that was around what skills you think are required for individuals looking to get into banks in these days of responsible banking. So, as it's addressed to you, Benny, could we start with you, please, and then we'll move on.
Okay. I'm not sure if there's anything different than historical. I think that there's a typical banker, analytical capability, right? Being able to think outside the box and critically, I think is fundamental, right? I think the new element that would maybe add is maybe a bit of social empathy, okay, element to it, where you have to sort of understand. It's not the old saying of greed is good. I mean, I think that's the old model. I think now there's an element of that, but you have to layer a sense of the responsibility, maybe not empathy, but responsibility on top of that. Okay, and saying like, what is it that we're doing? Is it the right thing to do? Are we sending the right message? So I think, but I'm not sure that's a skill set or realistic a mindset. Okay, for us at the bank, we as we say, it's a DNA thing. We think it's a more of a mindset inhibited thing, not something you could actually teach, okay, or learn. But in terms of a skill set, yeah, I think it's just being analytical, being creative, thinking outside the box. I think just your typical skill set that any banker would ask for.
Thank you. Sasha, would you like to comment on this, please?
I think Benny's done a great job of articulating the core skill sets needed. I think when you add in the knowledge side of things, I think you get into some interesting, like we're constantly trying to wrestle with, like in the realm of like hardship and vulnerability, for example, to what extent is it best to have specialized teams that can support customers experiencing hardship and vulnerability, versus to what extent do we need to train kind of all our kind of retail bankers and small, medium-sized bankers. And so there's always that dynamic and that tension, because you need to build the capability of all our bankers, but at the same time, kind of from a kind of a KPI perspective, from a best outcome for customers perspective and efficiency perspective, sometimes specialist teams are helpful. That will grow from a climate perspective, from other kind of issues as well. And I think it does vary a little bit. Like in our corporate institutional bank, there's a lot of emphasis on building the capability on top of that core skill set that Benny's added. You need to think a little bit differently how you do it from a retail perspective or a business bank perspective, because you need to be able to deliver it at scale. So it's that specialization versus the general kind of layering in that I think is something we're kind of working through.
Thank you. Arnaud, would you like to add anything very briefly? Sorry, because I'm conscious we're running out of time.
I'm just going to copy and echo Sasha and Benny's comments. Nothing to add.
Thank you very much. Well, I'm afraid that's all we've got time for today, but I'd like to thank all my panelists most sincerely for such an interesting and insightful discussion. It's been really great to hear all your comments, so many fascinating points there that I could call out, not least of all Benny putting governance first as the underpinning body that we need. That was really fascinating, thank you. I'd also like to thank our keynote speakers, Mikhail Sorensen and Puleng Nijivile Patele, and our chair and president, Steve Pateman, for his remarks earlier. I look forward to our viewers joining us again tomorrow for day 2 of the conference, where Joanne Murphy will be your host, with Oliver Holborn, Director of Strategy and Ventures at NatWest, will be providing a keynote speech, and the panel session will be looking at how are the UN Principles for Responsible Banking being implemented by banks. So until tomorrow, please enjoy the rest of your day, and thank you very much, all of you, for attending, and thank you everyone for your questions, and thank you so much to our panelists for your contributions. So thank you very much, and take care, and goodbye.
Thank you.
Thank you. Bye-bye.